is a great time for investors to buy into quality businesses like ours. So we have still just shy of 200,000 shareholders. It's a very large issue. And we went through a fairly difficult market from the time we opened the issue. I think last 8-9 trading sessions have been bad for the overall market. So 72% of our revenues come from the US. Frankly, that is by far the largest, most robust tech services market in the world.
The proportion of revenue that comes from India is very low. I mean, is there a plan to expand India business?
I think there's a lot of talk about AI compressing software development. I think that's somewhat true. What it does not account for is, yes, Project X amount of effort will come down, but there will be a lot more projects because of AI.
Everyone is talking about the work-life balance. What's your take on that?
I think it's a personal choice.
So first of all, your first reaction on the listing, the kind of listing that you got.
Listen, we are not, and I assume your question means the stock price movement immediately after listing. We are not in this for what is the stock price today or next month. Our outlook for the business is that we will deliver great performance every quarter for the next decade or more. And if we do that, our stock price will take care of itself. The second thing I'll say is that a tepid, volatile market is a great time for investors to buy into quality businesses like ours.
So you are coming back to the equity market after 5 years of a hiatus. So your thought on that?
We are very excited and very proud to be back in the public markets. I think it's great for our talent and employees. They'll get to know every day what a great company and high performance company they're working for. That's true for our clients too. But in addition, our clients will get to know that we are constantly investing in the most relevant technologies of the future.
Okay. So the promoters have divested around 20%, right? Through this?
Yes.
Yeah. So do you think after this, there'll be any change in the culture of the company or the DNA of the company with new investors coming in?
We have always been and will continue to be a management-run company. Our Carlyle has brought value to us, but they haven't changed how or what we do as a company. So nothing will change.
So you chose the OFS only route. Any particular reason for that?
We have lots of cash in the business. Okay? We have, I think, end of the year, we had over $200 million, well over $200 million cash. So there's no need for cash. And we're generating close to 100% of our profit after tax into cash because of our very good working capital management. So there's no need for capital in the business.
Okay, that's why the OFS are not IPO. Okay, but are you kind of disappointed with the kind of retail participation that you saw in your offer?
So we have still just shy of 200,000 shareholders. It's a very large issue. And we went through a fairly difficult market from the time we opened the issue. I think last 8-9 trading sessions have been bad for the overall market. So, like I said at the beginning, I am focused, our entire leadership team is focused on long-term performance. And I'm confident we will deliver value for shareholders. It's good for people to get in, especially during troubled times in a good business.
Okay. So you are one of the smaller IT companies with so many large and medium IT firms in India. So how do you foresee the future for the company given the changing, fast changing technological landscape?
So what we are by revenue, seventh largest, I think, on revenue. So we are smaller than some of the larger ones, but not small really. We've also demonstrated, even from the time we are much smaller, over the last decade, we've demonstrated we will gain market share every single day from a larger competition. Over the last decade, we've grown over 2 times industry average. That happens because we're gaining market share. And we were doing that very much small. I think our ability to do that going forward is even better.
Okay, okay. Now, I think if I'm not wrong, 75% of your revenue comes from USA. That's a large exposure, geographical concentration, I would say. So, given the kind of policy disruption that is happening under Trump, do you see it as a challenge, or I mean, how do you view this?
So 72% of our revenues come from the US.
Mm.
Frankly, that is by far the largest, most robust tech services market in the world. So if you want to be a meaningful player, you have to be meaningful in the US. The biggest companies in the world are all there, and many of them are our clients. Okay. I think the animal spirits from policies far outweigh any potential downsides from tariffs. Okay. So think of stable tax environment, no threat of taxes going up, lower regulation, more support for M&A IPOs. It just means that businesses feel more confident. Quick early evidence, we are in earnings cycle. 77% of S&P 500 have announced results. And what's the outcome of that? S&P reached an all-time high.
Okay.
So if it's good for our clients, it's good for our industry, it's good for us.
Okay, but H1B visa, that is not a very big issue.
So I think all the H1B disruption happened in Trump 1.2. We are quite ready. We got ready and we were able to go through it fairly smoothly. I don't think there's going to be any further disruption, but should it happen, our dependence on H1B at this point is negligible.
Okay.
New H1Bs. We still have H1B workforce we hire in the US, but new H1Bs going from India, our dependence is small.
Okay. But going forward, I mean, do you think that there is scope for diversification geographically? And I think your revenue, proportion of revenue that comes from India is very low. I mean, is there a plan to expand India business?
If you go back, 4 or 5 years ago, our Europe contribution was 15%. It has now gone up to 22%. This is actually in spite of material, devaluing in both pound and euro, right? So that's a good diversification for us. Europe grew. I think we're going to go through a similar journey in Asia now. So Asia is 6% right now. I think I'm hoping we will see a sustained period where Asia will do better than company average. And within Asia, I will call out 2 markets. One you already called out, India. The other one is Middle East. I think both these are extra focus for us, and we expect we'll do better.
What kind of expansion do you see in India?
I think we've been, let me say, too selective, not the right thing for us to do. We've been too selective about India market. There's lots of opportunity, right? In India, actually Middle East, both are economies that are growing fast, that are also somewhat decoupled from global macros. Global macros go up or down, India still does well. Actually, so does Middle East. So we think there's opportunities, lots of places of opportunities. One of the specific areas in India we will focus on is GCCs.
Okay. And, since almost like 97% of your revenue comes in foreign currency. So these are good times for you because Indian rupee is depreciating.
Correct.
Okay.
Yes.
Okay. So do you foresee, I mean, have you kind of made any estimation as to where do you see the rupee and how are you playing this out? I mean,
we're not in the business of Forex and it's somebody else's job. We manage our business for what we control, which is do a solid growth, solid operations. If the rupee depreciates, we'll get further benefits. Otherwise, we'll still be okay.
Okay. So maybe my last question, how do you see the AI challenge? I mean, the development in the AI sector, and do you see it as a challenge or opportunity for the company?
Well, I think most definitely an opportunity. Okay. So right now, if you think about AI, all the costs, the investments, value, it's a bit of a circular economy with 8, 10 big companies in the world. Okay.
Mm,
Somebody's buying, somebody else is selling. There's a lot of spends, whatever, $500
mm,
billion a year. I think, and there's some value being realized by the consumers. They're not paying for it fully, not certainly anywhere proportional to that kind of investment. But the true value for enterprises to realize, we have to build software. We have to build software that incorporates AI into every core enterprise application. That's something we will do. When I say we, us, but also companies like us.
mm,
And I think there's a lot of talk about AI compressing software development. I think that's somewhat true. What it does not account for is, yes, project X amount of effort will come down, but there will be a lot more projects because
mm.
of AI.
Okay, okay. So this is my last question. Everyone is talking about the work-life balance. What's your take on that?
I think it's a personal choice. Okay. I think everybody needs to find that amount of work that will keep you working for 50 years or more.
Mm,
See, our lifespan is going to increase. So the earlier in India, like retire at 58, study till 21, work for 25 years, then enjoy retirement for 20 years. That's assuming a lifespan of whatever, 70 years, and healthy, you're expected mentally, physically till late 50s, early 60s, so you retire. But all that paradigm is gone. You probably live till 90. Okay. The next 10 years, cancer, central nervous system disorders will be solved. Okay. So what do you do till 90? You're going to retire at 60.
okay.
You can work for much longer. So you need to figure out what is a work-life balance that will keep you going for 50 years or more. I think it's a very personal choice. There is a balance that each person needs to find within himself or herself. I also think that that balance will change over time. When you're younger, you could probably do 80 hours a week. But when you get a little bit older, you couldn't. But it's still an individual choice.
Okay, okay. Great answer. Thank you, sir. Thank you, and congratulations once again for the listing. Thank you, sir.
Thank you.